Hey everyone, it's Michael Valtos from Orderflows, and this is a special video I'm doing on delta analysis in Orderflow. Partly because I got a question from a user about delta, and I thought I've answered it actually before, but again, I'm specifically making this video because I answered it, and then someone else emailed me another question about it. So I do know there's interest in this topic. That's why I'm making this video. And the question came in, can you explain, the first question, can you please explain why markets can rise strongly on falling delta and cumulative delta and vice versa? It's a very common occurrence, at least in the currency markets. That leads them to the question of delta readings, whether, this leads me to the question of the validity of delta readings, okay? Basically saying, is delta really valid, useful? I wrote back, I addressed this in a recent video as far as the first part, rising price and increasing negative delta. Market can rise when delta is increasing negatively because there's supportive buying is coming in to bolster the market. I showed an example. I'll show in this video some better examples. Then he replied back with another question. Understood. I know this has to do with limit orders holding the market, even dominant pressure on the other side. How can this help in our trading decisions when we are taught to link rising delta with buying pressure and thus theoretically upward price movement? If cumulative delta, when you get into cumulative delta, that's a whole nother topic. If cumulative delta can be positive or negative on a rising market, how can using this help? And yeah, this is a very important question actually. And I want to highlight it actually because I'm a big believer in delta. I do believe delta can help traders. But it gets a little murky. I'll say murky. Sometimes it's a bit hard to get your head around initially with delta. So I'm going to try my best to explain it. The tools I'm going to use in this presentation is the Orderflows Trader software, which is the volume footprint. But before I get into it, I'll go through a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, I'm not telling you, because delta is positive, you go out there and buy. No, analyze what's going on in the market. So let me get a chart up here really quick. Let me find a good chart to use. I don't know. We'll just okay. Well, since he's talking about currency markets, I'll start there. Okay, so what do I got here? This is a euro currency chart. Now, I don't have cumulative delta on this chart, but let me just throw it up there. Okay, so first part of his question, can you explain why markets can rise strongly on falling delta? Okay, so really got to break this question down. Why markets can rise strongly on falling delta? Okay. All right, well, so why can markets rise on falling delta? Well, why would you have negative delta on a rising market? Well, let me find something just to show you a better example, a clear example. So here, okay, market is this bar, okay, strong negative delta minus 200, right? Your strongest negative delta in recent, bars. Why is the market going up? Well, okay, you have supportive buying, you get limit orders in here, right? So what is delta, right? Delta is measured, basically delta is the aggressive buyers in the market. So buyers or sellers rather, aggressive traders. I'm sorry, I'm just doing this. I didn't create a whole presentation. I'm just doing this to get it out. So if my train of thought sometimes wanders, I'm just I'm doing this essentially live. It's not scripted or anything. So you have a bid. Market's always bid and offered, right? There's a bid and there's an offer. Now people will say, no, it's not. The market can be limit up. Yeah, okay. General market conditions, there's a bid and there's an offer. So in this case, say the market's bid at 06 at 6.5, right? So there's bid and offer. When someone sells into the bid, they are being aggressive. They're the aggressive seller. and that registers as -1 on the delta. If someone buys the offer, that registers as +1 on the delta. So when you have a minus delta of 203, you had 203 more aggressive sellers in a bar. So when you got negative delta in a bar that's going higher, you got two things. One, you've got supportive buying in here. So you got 344, 292, 321, 387. Okay, so there's people bidding the market. You know, they got limit orders in there, passive buyers, so to speak. That's why you have negative delta, because there's a lot more selling going on in here. And then later, you know, maybe all these people that were selling it realize, shit, you know, this market's not going down anymore, and they stop selling. You know, let's say, okay, let's give this one. They could say, let's give this market some time to breathe. I know I used to do that when I was selling the shit out of the market, and I was pushing the market lower. You know, when I was working on the institutional level, I say, hey, that's it. I don't want to push it any lower. I'll give it a break, let it breathe, let it come back up before I start selling. You know, why would I want to be selling down here at 06 when I'm the reason why the market is selling off, right? I could pause, let the market, let some buying come back in, and then start selling it again to move the market lower. Okay, so, you know, as one of my other users pointed out to me today, it's also, you know, it can be a sign of lack of liquidity. And so what happens is the market starts, you know, the selling pressure eases, okay? And, you know, the buying is still there on the limits, okay? But what's happening now is the selling is slowing down, and if not stopping. But on the way back up, you know, people are buying it, and, you know, the traders that are realizing the market's starting to start rallying, you know, that were working offers at 7, 7.5, 8, are thinking, hey, this market's coming back up. I'm going to pull my offer. Why should I sell at 7 if I think the market's going to rally? I could sell it up here at 10, at 11, at 12. So that volume, you know, that liquidity is being pulled out of the market, right? If you ever watch a dome, you always see people pulling bids, pulling offers, as well as, you know, placing new bids, placing new offers. But, you know, as the market is rallying, you know, sometimes you see, you know, like in the E-minis, you see 1,000 at 6, at, you know, 26, 1,000 at 26 and a quarter, 1,000 at 26 and a half. But as that market goes up, people are pulling their offers, right? It's not trading. They're pulling their offers oftentimes because they realize the market's going up. So why should I be selling it at 6 and a quarter when I could be selling it at 6 3/4? You know, so they'll back off, they'll basically, and the market will rise up. So as the market's rising up, there's not enough liquidity here for the buyers to buy. That's going to turn this delta from negative to positive. Okay, that, you know, I mean, if, you know, if there's still a big seller in here, say right here at this 291, if there's another 204 lots, then you'd have positive delta. Right? The market is going to trade through there, and people buy another 204 lots, and you'd have positive delta. Okay, but there's not. There's that liquidity is out of the market for whatever reason. Okay, so, you know, that's the first part of the question. So, you know, that's how a market can rise on falling, well, on negative delta. On falling delta, okay, let me give you an example here. You see this a lot in thicker contracts, thicker volume. Let me just see if I could, can't remember if there was a decent example here today. What is that? That's the 5s. Let me see in the bonds. Okay, so, you know, I explained how a market could rise on negative delta like that. So on falling delta, how can a market rise? Let me see if I got a falling delta in here. Not really. Let me check crude. Okay, so, you know, this is kind of an example, I guess. The market's rising here on, you know, well, that's on negative delta. You get up here near the high, you know, it's 800 here in this delta, 650 here, minus 170 on the high. Okay, why? Minus 170 because, you know, you got people selling into these bids, right? The market's rallying. People are buying up here. they're bidding the market up. People are, but sellers up here want to sell it. Boom, they're selling it. Here, you're still at your high. You got negative delta, negative delta, negative delta, negative delta. Why do you got negative delta? Look down here. Look at this volume here. Look at this volume. Look at this volume here. So there's supportive buying in here. Okay, so what's going to happen to this market next, right? You got to ask yourself, well, you have the supportive buying. Okay, so is that bullish or that's bearish? To me, that's bullish right now. Okay, but you're up here at your high. So if you've got bullish signs or you got supportive buying in the market, you really are being expect the market to rally and keep going higher. What happens? It just goes sideways. It's not going anywhere. It's not going higher. So at some point, two things are going to happen. One, you're either going to make a high, or two, you're going to sell off. You're going to sell off if these supportive buyers are basically exhausted. If they bought all they need, and it comes in later here. Okay, so all of a sudden here you had all this supportive buying. It dries up. I'll say it dries up, but it's it starts to be overrun here. And then as you get up here, you see boom, more aggressive sellers coming in, 700, 500, and the market moves lower. That's how a market can rise strongly on falling delta. Oh, that's not really falling delta. That's still negative delta. I really want to address your question precisely. But again, it's today the market conditions aren't really there. Because what you had going on up there on that crude is you hit the high. You went up to the high on sort of it's here's 800 strong, here's a bit weaker, here it's weaker, new high, new high. Then you get some selling off there. Again, today's market conditions weren't very conducive to answering this question. Actually, you know what? Let me look at the S&P 4 range. Get this off here. Okay, so again, it's not really showing that delta decreasing here. I'd love to show you a picture perfect example, but unfortunately there really wasn't one today. But again, nothing is ever picture perfect in the market. As a trader, you're making the best decision with the information that you have. Okay, well, I'll take a look at the 10 range really quick before I move on to the next part of the question. I mean, I hope I should have been able to answer that question with my explanation. Okay, I guess this would be kind of an answer here. How can the market rally strongly on falling delta? Okay, so I got the 10 range chart. I had it here. So here you got falling delta, 7,000, you're coming to a new high. That's what you like to see. Then next bar, 1,000. So it's dropped off precipitously. Next bar on the high, minus delta. So the market rallied on declining delta, on falling delta. Why? Well, what do you got in this bar? Look at this volume. 7,000, 4,000. And look as you go back up. What do you got here? 1,200, 2,000, 900, 1,000. So, even though it's still positive delta, at one point this bar was minus 3,000 negative delta. So early in this bar, there's some strong selling in here, selling into strong bids. So you had aggressive sellers selling down here, 5,000, 5,000, 7,000, 4,000, 3,000. At the end of the bar, you know, when all the dust is settled, then you add up, you know, you do the delta, when delta's being processed each tick. But you know, when you look at the bar after the fact, you know, you see the delta, it looks weaker. It's only 1,000 compared, you know, obviously to the next bar, but still, you know, would this be a stronger delta if, you know, if this was 9,360 instead of 936? You'd have a big strong delta. So, you know, the market rallied, still going up. The reason why the delta is kind of looks like a weak number, kind of deceiving, is because you had a lot of bidding in here. And on the way back up, there's not necessarily that liquidity. You come up here, you got negative delta, minus 2,2264. Why? Is because look at this volume in here. There's much more being traded on the bid side than the offer side. You know, another thing you could do with the software, you could look at the actual bid, the volume traded on the bid, and the volume traded on the offer. So you can see here, on the offer, 33,000 traded. On the bid, 32,000 traded. So, you know, 1,000 more traded on the offer. That's why you got the positive delta of 1136. You know, here at this high, you got more selling going into the bid. 4,500. Sorry, 47,000 sold into this bid, whereas only 45,000 bought on the offer. That's why you got the negative delta. I don't like to keep all these things. Yeah, I don't need to know the actual numbers, but for me, the headline numbers is good enough. You start putting up a lot of that stuff, you get confused. So I had to pause for a second. But you know, if you're interested in seeing what the actual number was to trade on the offer and the number traded on the bid, you can get that information. But again, you know, what you're looking at is, you know, this market has got supportive buying going up. So even though it's declining, you know, there's supportive buying there. They're selling. Yes, they're selling. There's never more buyers than sellers, right? For every buyer, there's going to be a seller. But what you're looking at is the more aggressive buyers and more aggressive sellers. So the next part of the question is, you know, cumulative delta. Okay, I don't really use cumulative delta. I find personally, I've always felt cumulative delta was lagging. And when you start going, you know, I use range-based charts, which, you know, a lot of people like to use minute-based charts, but when you use minute-based charts, depending on the time frame you're using, you know, your cumulative delta can really either be lagging or, I don't say make no sense, but be useless. And again, I'm going to show you. So first thing, I'll pull up a minute-based chart. I've got a 1-minute chart here in the E-minis. Whoops. Okay, so anyway, so here's a mini chart. Okay, cumulative delta right here. Okay, well, we'll take it, we'll walk it back up to when we made the high. So you're on your high of the day up here. You got ratio and divergence. At this point, you got a very positive cumulative delta, 12,000. Okay, start selling off. You know, if you're using a 1-minute based chart, looking at cumulative delta is to me no value, because, you know, it's taken into account all the other delta for the entire day. So if you're looking at delta, you know, it's not going to change for a long time. It might change once or twice during the session, but you know, at this point, when you're up here at the high, you should have a very strong positive delta, right? The market's not going to rally on negative delta. I mean, it can, but generally it's going to rally with aggressive buying. You know, if it's a strong move, it's going to rally. You're going to have positive delta when you're at your high of the day, cumulatively. Again, I'm not saying, you know, like here's your high of the day, you got negative delta, but the cumulative number, it's a build-up, right? It's cumulative. It's the entire session's number. So you get up to the high, it's 12,000. Okay, so what's it going to take to turn it negative? It's going to take 12,429 more sellers than buyers, okay? But if you're using a 1 minute chart and you're only trading 1,000, 2,000 lots in a bar, that's not going to happen, okay? In one bar, it's going to take a long time for it to catch up. So you're at your high, you start selling off, okay, your high is 39, you get down to 37, you got a lot of negative delta in here, but it's mixed in with some positive deltas. You've come off 2 points, still at positive delta, 10,000. Okay, later, still positive, 14,000 now, 13,000, 10,000. Let's see where it really comes off here. Makes a move down here. Okay, so it's selling off, right? What's happening? You're getting selling coming in. You got bars with negative delta, 200, 500, 1200. You do have some positive delta in here mixed in, but again, more negative delta. Cumulative delta is just decreasing. So, maybe you can track cumulative delta on some sort of average. You're like, oh, it's decreasing. That's a good sign. Cumulative delta is going lower as you're moving down. Okay, I could understand that. But for me, it's if you're just looking at cumulative delta and just looking at it, it's still positive, and you're moving lower. You've sold off from 39. Now you're trading down here at 33. Still got a fairly healthy positive delta. That's why I'm not a big fan of cumulative delta in my analysis. Again, I know people that that use it in their trading, and they're happy with it. But again, for me, I don't find much value in it. Again, different ways to approach the market. Okay, lots of different ways to approach the market. So, here, what is this? Euro currency is a 15-minute chart. Cumulative delta right here. As you're going lower, you got negative delta. You start rallying a bit, you still got negative delta. There's not much change in it. Again, you hit a new low, very strong negative delta, your strongest negative delta, then you rally from 91 all the way up to the close, and you got negative delta still, but you already rallied, right? So how's it catching up? It's not really catching up. So, again, so back to the 8 range chart. Okay, so, well, okay, let me find a different chart. Okay, so again, cumulative delta, sometimes when I say it's lagging, right, you got to take into effect, it's a cumulative number from, from a certain point in time. Okay, so, if you're looking at cumulative delta at 1 o'clock, you literally got the whole day, and it's still negative, right? It's trying to get positive in here. We're starting to rally a little bit, but it's still negative. You get a bar, you got a bar with a positive delta, then a little bit later you got a bar with a negative delta. They're sort of washing each other out. Again, I'm not a fan of cumulative delta. I know people that are, and that's great, but for me personally, I just don't find much in it in my own style of trading. Again, other people, everyone's got their own style of trading, but again, that's the issue. But that's the thing that I have with cumulative delta. So NASDAQ, okay, here's cumulative delta. We're selling off here, okay. You got positive delta. This is 7 in the morning. You got positive delta all morning. You're selling off. Your high is much earlier. You're rallying up. But then you're coming down. Finally, you still got positive delta. You're coming down into your lows, down in here. Still got positive delta. Come down here. Now look, cumulative delta is 9. Way down here already. Way down here at the low. Flips. Goes down to negative, but then the market turns. Buying comes in right here, and you had first 1 bar, you had a minus 30 delta. All of a sudden you got positive 220 again. Then here it's still positive as you're making new lows. And even though you're getting some negative deltas in here, the positive deltas are just outweighing it. So yeah, people say, well, you flipped. You went from negative delta of 30 and look at this big rally you got. Yeah, but then, here you get negative delta, market turns to positive delta. Again, to me, it's like using a moving average, essentially. So anyway, moving on. Next part of the question is his reply. Where is it here? So, how can it help with your trading decisions? We're taught to link rising delta with buying pressure, thus theoretically upward price movement, and vice versa. Okay, if cumulative delta can be positive or negative on a rising market. Again, I just explained why I don't particularly like cumulative delta. I like bar delta. But again, I'll give you a perfect example. I mean, the whole thing of divergences focuses around delta, right? Well, the reason you have a divergence is because you have a new high with a negative delta or a new low with positive delta. So a new high with negative delta right here. Okay, and what's it telling you? What's a divergence? Is when price and an indicator go in opposite directions, right? You're at a high, you expect positive delta. So now you're at a high, you got negative delta. It's telling you selling pressure. Selling is coming into the market. Okay, up here at this high, you got selling coming into the market. Okay, when you're at a low and you got negative delta, yeah, that's great. You're at a low, you expect to have negative delta, right? You expect the market, as the market was going down, right? You expect to have the negative delta. But anyway, let's talk about this move here really quick. Okay, so you're making this move lower on sort of declining negative delta, and it actually turns positive right here. And you're thinking, hey, why is this market going down, right, with negative delta? With, declining negative delta. It looks like the delta is actually getting stronger. And it is, right? I'll say it is, but what's going on? So you get up here at your high, right? You got it changed, right? It went from positive delta to negative delta. You got this divergence because it's a new high with negative delta. That's what a divergence is. Selling divergence, buying divergence would be the opposite. It'd be a new low with positive delta. But anyway, you're coming down here 2005 to 2800, then 800 minus 18 plus 365. Well, think about what's happening in the market. Okay, as you're going down, there's still selling pressure. The selling pressure is just getting a little bit weaker, and in this case, there's still no net buying coming in here. Max delta is still 0. It's still all min delta. So this next bar, actually at this point in time, I thought this is where the market was going to turn and just sort of go sideways. I didn't expect it to actually come all the way down into the low. You actually had some strong positive delta in here. It was 1968. There was a lot of buying in here. For a while you had a buying imbalance here. It is 2839. Even here 3000. But then the selling came in. All right, selling came in. You ended up with again minus 18. That's not a big number. Minus 18 is, if there was an extra 20 lots here, this would be I'll show you. If an extra 20 lots traded on the offer, this would be a positive delta. But selling came in. There's just enough on the bid to turn it negative delta as the bar closed. And then you formed a new bar. And again, there was some buying came back in here, 27.97 right here. That's why you got positive delta. So people were looking for this market to turn here, actually, rather than down here. Buying was coming in. People were buying this offer, and even turn it bid, buying these 10s for a good, to the tune of 27.97. Okay, but then you know what? For whatever reason, people stop buying. Again, I'm not here to say why they stop buying, but I'm just reading what's happening. All of a sudden, selling comes back in. There's not much on the bids down here. 900, 1,000, 953. That if someone had another 500 lots on this bid and it got sold into, you'd be looking at a negative delta here in this bar. But it's positive because there was a lot of buying early in this bar. But what's the key to takeaway is you can see how this delta, the selling is it's getting kind of weak down here. And actually in these bars here, you're seeing it's like those scenes in the movie where the guy's on life support and you look at his heart monitor, you see the blip, the occasional blip. That's what you're seeing in here. You're seeing the occasional blip with the buying, with the max delta. 1968, 1970. So, you know, there's some buying interest coming into the market finally. You dip down to the low, you hit the low, boom, strong negative delta, 4,200. Because down here, buyers are stepping up down in here. Okay, and you can't take out the low. Again, I'm not saying because you can't take out the low, we bounced, but, you know, people are coming in here buying. You know, is this considered smart money? I don't know. You know, it's supportive buying in the market, 3,000, 6,000. But, you know, these people that were buying these 97s, you know, earlier buying this, sorry, buying 97s, buying these 10 3/4, 10 1/2s down in here, you know, maybe they're seeing the market selling off and they're thinking, shit, I gotta get out. And these are, you know, quote unquote trap traders, and all of a sudden they're turning sellers down here, but they're realizing, hey, maybe I should have sold here as the market starts bouncing back up. But again, you know, there's supportive buying coming in here, but there's still, there's the selling interest, you know, whether it's these people that were buying it in here looking for the market to pop up here, or, you know, or whatever, you know, maybe, you know, people, who knows, people are doing ARB or something, or people just thinking the market's going to, we're hit down at or low, maybe we're going to keep selling off. I don't know. That's not important. What's important is I see this buying come in, and then more importantly, I see this bar turning. Price action and the bar turns up. So the bar, you know, so these sellers that were selling here all of a sudden are realizing, shit, you know, I sold and the market's not going any lower. At some point they're going to capitulate and, you know, look to get out at some point. You know, everyone says, you know, I know some people say as soon as you sell, you're a buyer, because at some point you can become a buyer. But, you know, all these people that were buying down or selling down in here, at some point, you know, as the market starts rallying, are going to cut their losses and start buying. That's why oftentimes you see, you know, markets turn like this with the strong negative delta, and then the buying come in, you know, over the next couple of bars as the market starts to rally, and more people are thinking, hey, you know, we finally put in our low. You know, we got supportive buying down here, so all these people that are selling it got to start covering it and rally back up. Again, that's my own analysis. That's how I use delta, and to me, it's very effective. Whether, I hope that answers your question. Again, I'm not a big fan of cumulative delta, but again, it's, you know, delta is a tool, right? Don't think you can, I mean, I don't know, I'll say don't try to devise a whole trading system around, because you can. You know, I've done a lot of work with delta over the years, and again, it's something that's very useful. But again, it's don't take the numbers on the surface. Sometimes you got to drill a little bit deeper to understand what's actually going on, right? I mean, you got negative delta, you know, on a bar that's going up. You should be asking yourself why. You know, you're at a swing high, you got a positive delta. Ask yourself why. Why do you got positive delta? You know, these are questions that you should be asking. You know, what's going on in the market? You know, every time you make a high or a low, ask yourself what's going on. You know, don't just take it for granted that you have a low, you should have negative delta, but you got positive delta on the low, and thinking, oh, order flow doesn't make any sense. No, there's a reason for it, right? There's a reason why you got the positive delta here, is because, you know, you had some selling into the bids, but then, you know, you had people working offers here, still trying to keep the market down. That's why you got negative delta here, 207, 208, you know, 114. That as, you know, as the market starts rallying back up, you know, because, you know, as the market goes lower, right, there's going to be people working offers on the way down. If they really think the market's going to go lower, they're going to stack up their offers. They're going to work more offers. But then if the market snaps back, you know, boom, they're lifted. And you're going to end up with positive delta because aggressive buyers are coming in off the low. So anyway, I hope that answers your question. It's, again, it's something, it's a tool that, delta's a tool. Use it, you know, try and think about what's happening in the market, okay? Yes, when the market is rallying, you should have positive delta. Yes, when the market is selling off, you should have negative delta. When they diverge, you know, that's the time to pay attention to what's going on. So again, you know, I really hope this answers your question. You may have to watch this video once or twice more. Again, if it's still unclear, I'll try and write out a formal presentation and do it. But I really do hope this makes it clear. Sometimes, I try to explain things. I probably make things a bit more complicated to people. But again, once you understand delta, right? Like here, this is the delta scalper. It runs on a normal bar chart, but you could use delta in your trading. How can it help you in your trading decisions? Well, you look for things in the delta, right? And I got this indicator. I hate to use indicators, a tool to tell me when I think the market is, based on my analysis of deltas, when I think the market is changing from a supply-driven market to a demand-driven market. And this morning in the euro currency, this is how it looked on a bar chart. Gave us a nice sell here, another nice sell there. Here's a buy, didn't really work out. There's a buy on a red bar, I'm not interested in it. A nice buy on a green bar, and it did pop up a bit. So, again, it can be very useful if you know how to apply it. So, thanks for watching this video. I hope I made sense. I hope I didn't confuse people even more. I have that tendency sometimes. So again, thanks, and let me know your thoughts in the comments, and subscribe to my YouTube channel. Visit my website, orderflows.com. Thanks, everyone.